Hello and welcome back to a Real Estate Wisdom podcast with Vish. I'm your host Vishal Kapoor, your friend in real estate, helping you navigate the ever-changing property landscape in the Greater Toronto Area. If you are a homeowner, buyer, investor, or just real estate curious, you're at the right place. Today, we are breaking down the latest numbers from the TRREB April 2025 Market Watch and unpacking what the results of the recent federal election could mean for you and your property journey. So, let's get started. GTA Market Snapshot April 2025. Let's jump right into the numbers. According to the Toronto Regional Real Estate Board, April Market Watch, the GTA market is showing some interesting shifts. Sales volume. 5,601 homes were sold in April, down 23.3% from the same month last year. That's a big drop, and it tells you buyers are still cautious. New listings. On the flip side, new listings were up 8.1% per year over year, reaching almost 19,000. More options for buyers, more competition for sellers. Average price. The average selling price was just over 1.1 million, down 4.1% from last April. The MLS Home Price Index also dipped by 5.4%. Inventory, we are seeing high inventory levels since 2009, I should say, which means buyers have more choice and negotiating power. As sellers, you need to be sharp with your pricing and presentation. TRREB's own Jason Mercer put it well. Inventory levels remain elevated historically in April, pointing to substantial choice for households looking to purchase a home in the GTA. Buyer took advantage of this choice when negotiating purchase price, which resulted in a lower average price across market segments compared to last year. And I have seen this from last 2 months. Like I have the buyers, we did negotiate it for them, and we did get the property what they were looking for. We have more choices. So, what's driving the market and what behind these trends? Interest rates. Many buyers are still waiting for the Bank of Canada to cut rates. With the overnight rate holding at 5%, affordability is tight. But we could see some relief later this year. I believe no rate cuts coming. I know they put some halt, but I think it might be happening that they have to rate cut. April is usually a busy month, and we did see more activity in March, but overall the market is more balanced and cautious than in previous years. April was different because this year, not only the election, but the tariff war going on, we see the slow movement. Supply pipeline. Pre-construction sales are down, which could mean fewer new homes in the pipeline. If demand pick up, we might see inventory tighten and prices bounce back. But that's I'm talking about right now, we have the more 4 months of inventory. Well, let's look into what does mean for a real estate, the federal election, which we just happened. But now let's talk about politics. The recent federal election saw Mark Carney's Liberals form a minority government, and housing was a hot topic. I know a lot of announcements happening with a new government, which they were promising. And here's what you need to know, though. Housing strategy. The Liberals have promised to ramp up home construction, invest in affordable housing, and make it easier for first-time buyers. Their goal? Nearly 500,000 new homes a year using public land and new financing tools. I heard that before as well. Investor confidence, with the election behind us, there's more certainty. Carney's economic background could help stabilize the market and encourage stalled projects to move forward. Now, if the government delivers on GST exemptions and new incentives, first-time buyers could see real savings and better access to the market. Regional impact, remember, federal policies are just one piece of the puzzle. Local and provincial governments will need to align for these plans to really take off in the GTA. TRREB President Alicia Berry-Sproul also pointed out that many households are watching Canada's trade relationship with the U.S. We're all watching, aren't we? And stronger trade could boost consumer confidence and drive more real estate activity, especially if rates come down and supplies stays healthy. Well, there's a lot of negotiations happening, and let's see where we land up, but uncertainty is still there. So what should you do now? So what's my advice in this market? Buyers, this is your window of opportunity. With more listings and softer prices, you have leverage. But if you wait for rates to drop and demand surges, that window could close fast. I couldn't say that more. Do when you feel it's right, when you feel comfortable. Sellers, price is right and make your home shine. There's more competition out there, so presentation is everything. People picking up like a small stuff. My buyers did. Investors and developers, keep an eye on new federal policies. Incentives for building and first-time buyers could shift the market quickly. We have seen it before, and it can happen again. Now, let's move to rental market update. Rents are falling. The average cost of an unfurnished one-bedroom in Toronto dropped to $2,126 in April 2025, down $127 year over year. Month over month, rent also slipped by $7, continuing a 5-month streak of declines. Vacancy rates are up. Toronto vacancy rate reached 2.7%, the highest in years, giving renters more choice and leverage. And this is leading many landlords to avoid rent hikes and prioritize keeping good tenants. That's why a lot of movement's not happening. Wider GTA trends, if I look, downtown Toronto, Mississauga, North York, and Vaughan, Richmond Hill all saw drops in unfurnished rents. While Markham and Scarborough recorded increase, North York posted the steepest furnished one-bedroom drop at minus 9.61%, while Brampton saw the biggest unfurnished one-bedroom increase in plus 2.38%. Condo rentals, average condo rents are also down, with one bedroom at $2,032, down 3.7% year over year, and two bedrooms at $2,374, down 4.3% year over year. Active listings, apartment make up 85% of rental listings, with the one bedroom the most common at 45% of available unit. So, takeaway. The rental market is cooling with more supply and softer prices. Welcome news for renters, but a challenge for investors and landlords. I know the investors, landlords still struggling and struggling more. Now, the rate cut predictions. Let's talk about borrowing cost, a key driver for both buyers and renters. The Bank of Canada's policy rate sits at 2.75%. With the next announcement scheduled for June 4th, 2025, what's expected? Most major banks and economists predicts gradual rate cuts through 2025. With the policy rates likely drop by 25 basis points at each announcement, until it reaches 2.25% by year end. I know the predictions didn't change. So why the cuts? Inflation has cooled to near the 2% target, and the BOC is shifting focus from fighting inflation to supporting growth. The consensus is that rates will not rise again soon, and further cuts are likely as economic headwinds persist. A lot of things happening in the global market as well, so we have to keep an eye on that because things not only get affected locally but globally as well. My takeaway: expect borrowing costs to ease gradually through the rest of 2025, potentially reigniting buyer demand and impacting both the resale and rental markets. Now, one thing like this, finally, let's look into jobs and the broader economy, crucial for understanding real estate demand. I know a lot of job losses are happening, not many job opportunities there. Employment was little change in April. With a modest gain of 7,400 jobs, the unemployment rate ticked up to 6.9% nationally, and Ontario rate rose to 7.8%. Yes, we've seen like more impact in Ontario for sure. Manufacturing and retail jobs fell, while public administration hiring spiked due to the federal election. Finance, insurance, and real estate sectors added 24,000 jobs. Now, that is temporary, I guess. Wages, average hourly wage grew 3.4% year over year, a slight slowdown from March. Looking ahead, economists warn of a possible recession in the second half of 2025. With unemployment potentially peaking at 7.7%, this could further dampen consumer confidence and keep both home prices and rents under pressure. The job market is softening, especially in Ontario. If unemployment rate rises further, we could see even more rental listings and continued downward pressure on both rents and home prices. So, for time being, market doesn't look rosy at all. Renters, more options and softer prices. Now is a good time to negotiate. Landlords, investors, prepare for more competition and consider longer-term tenant retention. If you don't have to increase, don't increase it. Watch for rate cuts. They could shift the market quickly, especially if employment stabilizes. I hope it will stabilize. Sellers, be realistic with pricing, as both buyers and renters have more leverage in this environment. I know it's tough, but you have to act smart. You just have to look into that, how much you make in this property investment. Well, that's a wrap for today's episode. If you have questions or want a personalized market update, reach out to me anytime. Details are in the show notes. Don't forget to subscribe, rate, and share Real Estate Wisdom with Vish for more insights into the GTA property market. Thanks for tuning in. Until next time, keep learning, keep asking a question, and remember, your real estate journey is unique. Stay wise, stay informed. Bye for now. Disclaimer: the information provided in this podcast is for informational purpose only and should not be considered as financial or investment advice. Consult with your professional before making any real estate decisions.